Hi traders, I hope you're all keeping well. Today is Saturday, the 23rd of May 2026. My name is Harry. Welcome to my channel. So we're looking at the silver on the 4-hour time frame. I think we may be seeing a reversal coming in the next couple of weeks or months. So we have what looks like to me an ending diagonal of a wave C. So ending diagonal is a chart pattern of the Elliott wave principle or methodology, and you can find an ending diagonal in your wave C of a zigzag or a flat, or in your wave 5 of an impulsive move. Okay, so diagonals, you can find diagonals in a motive wave of Elliott wave. Okay, so only two places you can find any diagonal is your impulsive leg, your 5, the final leg 5 of impulsive leg, or your wave C of a flat or a zigzag corrective pattern. So on this 4-hour chart of silver, we are correcting this move to the upside. Okay, so we are correcting this move here to the upside, and we've had our first leg 5, and this looks like a 3-leg up correction. So we've had our A, and then we've had our B, and this is now the final push to the upside for leg C of a zigzag. Because zigzag comes in 5, 3, 5, 3, 3, and then another 5 down. Okay, so at present all we have is this 5 down, and then we've had A, B, and then C to complete the 3. Yeah, and then we need another push leg down for 5 before we continue our uptrend. Okay, so what we see in front of us, or what I can see, is an ending diagonal in our leg C. Okay, so the rules are that, let me get rid of these lines because there's so many lines. So we've got rules for this leg, this ending diagonal. Okay, if it is a leg, if it is an ending diagonal, we've got rules for that, and the rules are that your 1 must be longer than your leg 3. So basically your leg 3 is smaller than leg 1, which in an impulsive motive wave, that is impossible. Your leg 3 should be the longest wave. Yeah, or must not be the shortest wave. All right, but in an ending diagonal, your leg 3 must be shorter than the leg 1. Yeah, as you can see, this leg 1 here is definitely longer than this leg 3. Okay, so that's one of the first rule met. And the leg 3 must overlap leg 1, so basically must close above leg 1, which we saw here. Okay, and the leg 2 generally is between 50% to 85%. Yeah, but most occurrences you see between 50 to 61.8. All right, so if I measure using my fib retracement from the start of leg 1 to where the leg 1 ended, you would see that leg 2 finished between 50 to 61.8 fib retracement. Okay, and also the other rule is that your leg 3 your leg 4 must be at least 50%. Okay, so let's get rid of this fib. Again, all you need to do is take the fib retracement. You measure from the actually you can find the fib retracement under Fibonacci. So if you go here under Fibonacci, yeah, you can find the Fib retracement. All right. So if you measure from 1, the origin of 1, which is this low here, yeah, you measure from that low to 3, your 4 should come at least, must be at least 50%, yeah, okay, which we also found on this one. All right. So the first rule, like I said, is your leg 3, your leg 1 must be bigger than your leg 3, yeah, but the leg 3 must not be the shortest wave in an ending diagonal. Yeah, so basically this leg 3 is larger than this leg 2, okay, this leg 3 is larger than this leg 2. So leg 3 is not the shortest wave, and this leg 3 is also larger than this leg 4. All right. So these are the rules. The other rule that we have, that earlier we've said, is that your 1 and 3, the trend line must connect. Yeah, and as you can see, the trend line is connecting 1 and 3, and also should connect 2 and 4. Yeah, and your 4 should overlap your 1. In an impulsive leg, your 4 should not overlap leg 1, but in diagonal, it is acceptable. Yeah. So as you can see, if you follow my dotted horizontal line, you will see that the leg 4 broke where the 1 finished. Yeah. In an impulsive leg, that is impossible, but in diagonal, it is allowed. Yeah. But your leg 4 should not break the low of, so basically should not overlap your 2, should not go below your leg 2. All right. Okay. So the criteria so far, we are meeting them. Okay. So when I saw this yesterday, I thought, okay, this could be an ending diagonal, provided that we do not see the low, or we do not break the low of these 2. Okay. And then for your 5, um, often overshoots your leg 1 and 3. So basically, you will see a slight pushover of this trend line, yeah, and then we then expect a reversal, yeah. So this would then be the end of the ending diagonal. So for 5, okay, which would be our C. So this would then be the end of this ending diagonal, yeah. And what we expect after that is a retracement that you will see would take out these lows, yeah, these 2, the low of 4 and 2, before. So this will be our final leg 5 for the correction for 535 of the zigzag. So then after that, then we should see a rally back to the upside. Okay. So so what we're looking for basically from next week is for the market, if this is an ending diagonal, the market to push up to complete the 5th wave, and then we'll see a reversal to the downside for the final 5 leg down before pushing up. Okay. So how do you trade this? Let me zoom this for you. So if this is to be an ending diagonal, then we have a pin bar on this 4-hour chart. Yeah, we have this pin bar here that the market has closed within or inside the pin bar. Okay, sorry, inside the bullish pin bar. So this is now what they call an inside bar. Okay. 1 second. Let me find my tool. So you can see this candle here, this pin bar candle here, the last 4 hours candle, the last 4 hour candle, which is this one, did closed between the up and the down shadows. Okay, so this is basically an inside bar candle. So what you can do is you can trade this in two ways. So you may want to wait for the next 4-hour candle to break the high of the pin bar to go long, yeah. Or if you want to be aggressive, if you see the market shooting up on Monday morning, let's say for example the market opened here, and then you see a rally to the upside, you may decide to go long, but that would be an aggressive entry. So that would be an aggressive entry. And then for your stop loss, you may want to put your stop loss below the pin bar, yeah, which I wouldn't advise you to do, but it depends on how big your how small or how big your account is, or how your risk level, your risk tolerance is. You may choose to go to hide your stop below here, or you can choose to go below this low here. All right, or you may even want to go below this 2 here. Okay, so the choice of stop loss is entirely yours. All right, but for me, if I'm gonna take this, if I see a break of the pin bar, then I will take a long trade. Okay, and my stop will be below this low here. Okay, just like it is now. My stop will be below here. Okay, so and then my take profit. In terms of my take profit, I will watch for how the market reacts when it gets to the high of 3. Yeah, then I would watch for the reaction here. Alternatively, how to know where to take a profit? All you need to do is you take your fib extension. Again, you go to Fibonacci. You take the trend-based fib extension. You measure from your B, yeah, where your B ended. Sorry, that is wrong. So you measure from where your 5 ended, the first leg 5 down, yeah. You measure from the end to your A. This is using the fib extension to your A, and then to your, and then find your final leg down to your B. Okay, and then you release the fib. So your take profit, your take profit for 5, and where to expect the 5 to this leg 5 to end is between this 1.0, this red line, to 1.618. Okay, so this is the box where you should be looking to take a trade to the downside. So we're looking for the fifth leg to end anywhere between this trend, between these 3 fib extensions, and we're also looking for a short opportunity to end our corrective leg. Okay, so I hope this ending diagonal video makes sense, or it's easy for you to understand. Any questions, drop me a comment. Like I said, only take this trade if it meets your trading plan. This is not a trading advice. This is just my knowledge, knowing about Elliott wave principles. Yeah, so do your due diligence, please, before taking the trade, if you do want to take the trade. But if you want to take it, entirely your choice. Again, wait for a break of the pin bar high, yeah, because now we have an inside bar candle. So this is a signal for me. We have a pin bar, bullish pin bar, and then an inside count, and inside the inside for our candle. So basically, this candle did not close, did not go below or above the pin bar. So this is a good signal. If you see a break of the high of the pin bar, you go long. Some traders do trade like this. They go long after the break of the inside bar candle, like this one here. They will go long. Okay, so entirely your choice what you want to do, but I see this as a very good buying opportunity if you do see a break of the pin bar high. All right, okay, take care now, and then I'll see you again. Cheers.